Richard Boyd Barrett.
Yeah, just to speak to our amendment, let me say that whatever allegations the Minister may throw at others, we're consistent in putting forward alternative proposals to raise revenue, to provide for the objective we have to significantly increase expenditure in housing and health and education, in other key infrastructure and services, and we do so consistently every year, and we have been very consistent in saying that the universal social charge was an unfair austerity tax imposed on workers, and particularly unfair given that the government resist trenchantly efforts to impose additional taxes, and did during the austerity period, but continue to largely opposed to redistributing the tax burden in a fair way. So the only discussion that ever seems to take place is a discussion about increasing or maybe occasionally slightly reducing the tax burden on the majority, but never do we talk about what we think is the elephant in the room, is the gross inequality in the distribution of income and the distribution of wealth in Irish society, and that were we to have a policy objective of trying to redistribute income and wealth to move towards a more equal society, that could be done. It could produce a lot of revenue and it could produce a fairer society, and never has that been more justified than in the context of COVID, in our view, where working people really demonstrated how important they are. It was the retail workers, the public sector workers, and transport workers, many others, health workers obviously, who kept us going when society was shut down, showed how important they are, and they are very often the same workers who are hammered with the universal social charge, are on much lower incomes. And you contrast that to how net household wealth increased very substantially in Irish society, even during the COVID period, and that most of that wealth and income is concentrated in the top 10 or so percent of our society. We think, and for all those reasons, it's justified to take radical measures to redistribute the tax burden, and through that to redistribute wealth and income more generally. So that's the logic of what we're doing. We're delighted that the rural independents have now adopted socialist policies in this regard.
Don't lose the rule of ourselves.
Them too.
Don't lose the rule of ourselves.
Yeah. Well, it's exactly the same amendments as we put forward for the last few years. So fair play to the rural independents in that regard. But I would like just to put on the record, and I said this during the budget, if you contrast the income that comes to PAYE workers, for example, or to workers generally, the 2.8 million workers who pay tax in USC, their total income is 130 billion euro, and their total tax in USC contribution on 130 billion euro is 27 billion euro in tax. And that's from your ready reckoner, the department's ready reckoner. Whereas the corporations, total income 203 billion, and their total tax contribution 11 billion. That's a pretty extraordinary contrast, isn't it? The corporations make 203 billion, and that profit has gone up by approximately 172% since 2012 in terms of gross declared pre-tax profits. So the corporate sector makes about 70% more in pre-tax income, 70 to 80% more, but pays pays almost 3 times what 2.8 million workers pay, but who between them earn only 130 billion. So that in a very, very stark way shows the workers get less, pay much more. The corporations whose profits have gone through the roof earn much more profits and pay much less tax. That is just unfair in our view, and we will continue to highlight it. We also propose, this particular amendment is intersecting with a number of other amendments that seek to address that, whether it's wealth taxes, higher earners social charge to replace the universal social charge, which, just for the record, as we have always said, should be abolished completely. We are for getting rid of the universal social charge completely and replacing it with higher bands of income tax on the highest earners and with a higher income social charge. And I think that's fair and justifiable, but it's, in our view, it is the elephant in the room that's never really discussed or touched. So anyway, on that basis, I move the motion, or move the amendment, and I'd be interested to see what the Minister has to say.
Thank you, Cathaoirleach, and to thank the deputies for their amendments. There are, however, a very considerable number of issues with it, including the cost on the Exchequer, the very significant erosion of the tax base, and the impact on the competitiveness of our tax code. In relation to Deputy Boyd Barrett's proposal to abolish the universal social charge, it's estimated this will cost €4.4 billion in a single year. The Deputy's suggestion to replace the USC with a high-income social charge of 10% on all earnings over €90,000 would yield €1.59 billion in a single year. Therefore, this would give rise to a shortfall of approximately €2.8 billion for the year. In fact, it is estimated that it would be necessary to place an additional charge of 28% on all earnings over €90,000 in order to raise an equivalent level of revenue for the Deputy's proposal to be cost neutral to the Exchequer. With regard to the Regional Independent Group's proposal to abolish the USC for those earning less than €70,000 and replace it with a national solidarity tax on incomes of those earning in excess of €120,000 per year, I note that the deputies have not specified the level of income tax that would apply under this proposal. However, it is estimated that the removal of the application of the USC on all incomes below €70,000 would cost in the region of €1.7 billion in a single year. Assuming no other policy changes to the structure of the charges, it is likely that if the new tax took the form of a new USC rate for those earning over €120,000, it would need to be as high as 14% in order to raise the same level of revenue for the Exchequer and ensure that this is a cost-neutral proposal. I note that the estimates that I provided don't take account of any behavioural change that could result from a significant increase in marginal rates of taxation. To increase a higher rate of USC would increase the marginal rate of tax, and high marginal tax rates could cause harm to our international competitiveness. The considerable progress that we've made in recent years to restore our economy, to attract and create jobs in our country, shouldn't be taken for granted, particularly given the challenges in the international arena that we confront at present. Abolishing the USC in its entirety, or exempting those earning up to €70,000 per year, will considerably erode the tax base. The current exemption threshold for USC is €13,000 per annum, and it's estimated that 28% of all income earners won't be liable to USC in 2022. To further increase this entry threshold to €70,000 would abolish and exempt about 88% of income earners from USC, or 100% if the USC was abolished in its entirety. This would significantly narrow the income tax base and would expose our economy to significant risk in the event of a future economic downturn. The USC is an important and sustainable source of revenue for the Exchequer. I also note that deputies have also suggested raising money also from companies whose profits are in excess of €1.5 million per year. This could have serious consequences for the competitiveness of our corporate tax regime, with potentially significant impacts for our overall economy. Some of the main features of the current corporate tax regime are its simplicity and that it applies to a broad base. Changing the rate or imposing additional levies on corporate profits would involve increasing complexity, and this could change the attractiveness of our corporate tax offering. It is impossible to accurately predict the effect that changes to the rate would have on the behaviour and decisions of large employers in Ireland. This uncertainty prevents a reliable estimate being made of any yield that might accrue to the Exchequer. While it is possible that imposing such a levy could lead to theoretical gains, it could also potentially lead to lower levels of economic activity and to companies passing the additional tax burden onto their staff, customers, suppliers and investors. Therefore, having regard to these issues, I don't believe there's a need to carry out any further analysis of the proposal outlined here, and for that reason, Cathaoirleach, I can't accept the amendment. Thank you.
See, first of all, Minister, when the universal social charge was imposed, it was in the context of austerity, and it was a very severe additional tax burden imposed on working people. And it remains, despite the fact that the financial emergency which was used to justify it has now passed. And we've moved from a situation of virtual economic collapse to one of the fastest growing economies in Europe, and an economy, I repeat, in which profits have gone through the roof, even in the context of a pandemic. And to say that we don't need to seriously look at the fairness and justice in that situation, something that I think was highlighted even more during the pandemic, where even, the government, as well as members of the opposition, had to laud the contribution of workers who are often very, very low paid, relative to some of the very high earners in our country, and who, in many cases, disproportionately were affected by the impact of the pandemic, either through the extraordinary work they had to do during the pandemic or through the fact that they lost income because their sectors were shut down. And we know, again, it was the high earners were the least affected. They did okay, and the profits of the corporations continued to rise. And the central bank's quarterly figures, which I always find very, very useful, showed that net household wealth continued to go through the roof during that period. And mom and pop, to use Deputy Healy-Rae's, didn't see an increase in what was in their purse. But yet, the figures don't lie. There was a massive increase in household net wealth during that period. So who was getting it? Well, it's not just property prices, actually. Well, no, I think what I do is I read the central bank quarterly report, and it tells you these things. And the central bank quarterly report actually said there was a very significant rise in financial assets as well, right? Because you see, the rich can make money from money, and they do, and they did during the pandemic. That's what happens when you have a certain amount of wealth. You make money just by virtue of having money. And you're not talking about people's principal private residency in terms of making money. Yes, the value of that may increase, but just for the record, in our wealth tax, we strip out the principal private residency and for everybody from the wealth tax, and there is still absolutely vast amounts of money left beyond that. And that's what we propose to increase. You're not talking about hitting the family home. What you are talking about is hitting the additional wealth that people have beyond that. And I'm a bit surprised if what Jed is saying is that, I'm not quite sure what he is saying, but let's put it this way, the contribution of workers in terms of tax and USC went through the roof, relatively speaking, after 2007. If I remember correctly, workers were paying about 13 billion euro in tax pre-crash. It's now up to 27 billion, right? And the big jump happened as a result of the USC. And that's never been rolled back. We've essentially turned an emergency tax into a permanent tax, which, every worker in this country will tell you about how angry they are when it's taken out, the little brackets on their pay packet saying USC and the big lump of money that it takes out. So to my mind, whatever justification, I don't believe there's ever justification for the USC, but I think there is no justification now, given the fact that we're out of the emergency which was used to justify it, and that workers are, proportionately speaking, making a much larger tax contribution than the corporations or the people who are so wealthy at the very, very top that they can literally make money just from having money. And that money continues to grow. So just to answer directly the Minister's point about our high income social charge only replacing some of the universal social charge, he is absolutely correct. But as I said in the introduction, the proposal we're making, it intersects with a number of other proposals which we'll come to in other amendments, which do make up the difference. So we are proposing, for example, new bands of income tax for those earning over 100,000, those are earning over 150,000, those earning over 200,000, and those earning over 250,000, which would raise about 3.8 billion. So we would not only get the money that the abolition of the universal social charge would lose us, but we get more when you combine it alongside the higher income social charge. And it would probably get to the sort of figures the Minister said when he said, what would you have to do to make it cost neutral? That's the sort of thing you'd have to do. You would significantly increase the income tax contribution of those earning in excess of 100,000 or 150,000 and so on. And by the way, it is just worth saying, again, I think this is a point that the Labour Party and others on the left should appreciate, that, 20, 30 years ago, it was commonplace to have that level of taxation on the higher incomes at the top couple of deciles. It was commonplace. I mean, there were Labour Party leaders who talked about things like taxing the rich until the pipsqueaks. That was commonplace on the left. And it seems we've rolled back from that. And I don't think the left should roll back from that. Because it is clear when you look at people like Piketty, who have studied these things, and I know the Minister, fair play to him, he's read Piketty. He knows about how that accumulation and concentration of incomes and wealth have occurred, since the onset of neoliberal economic orthodoxies. So, to my mind, it's just old-fashioned left-wing politics, but it's more than ever justified now when you see the high concentrations of wealth and income and profits at the top compared to the burden that working people are suffering. And I'll just say a last point, it's, when you think about our inability to retain and recruit workers across a number of key areas, whether it's the health service, whether it's construction, whether it's, education, all sorts of areas, you talk to the young people, they are leaving in droves and are considering leaving in droves because they just think it's not worth my while to live here. It's just not worth my while. Because my after-tax income just cannot allow me to live a decent life over here, whereas I can go to Australia or Canada or elsewhere, and I can. The income that I will get will allow me to live a decent quality life. And we have to address that. Now, maybe Jed and others or the Minister doesn't agree with my particular prescription, but we need to start to look at this. And that's the point about these amendments. We need to start to take seriously what is a legitimate and valid argument about wealth redistribution. And I don't think we do that. We tend to just operate on a sort of budget-to-budget basis. We'll tweak this, we'll react to this, that or the other thing, but we're not looking at a sort of more strategic debate about how do we redistribute wealth an income on a basis that will, to allow us to have a sort of sustainable and equitable economy in the future.
And in terms of the figures that Deputy Boyd Barrett brought forward earlier on in making his case for me, to me, you did make the point there that the gross profits, I think, are €203.8 billion. But in the same table, that table concluded that the taxable income of the companies is €106.4 billion. Now, given that this is a debate that you and I have had for years, those 106 point, that change between 204 and 106, you would mostly describe as being tax avoidance. Whereas what I would say is they are the use of allowances that form a normal part of corporate tax codes all over the world. But if you begin with your starting point of €106.4 billion, then payment of €10.9 billion on tax over that taxable income is an effective tax rate of 10.2%, which isn't, while it is lower than our current 12.5%, is still closer enough to us than using the larger profit base of €203.8 billion. And to restate, I think, to be indicating that Ireland at this point is going to do more than the OECD agreement in relation to how we tax larger companies, I believe would be dangerous for our economy. And Deputy Boyd Barrett, as I understand it, wouldn't just extend your tax proposal to larger companies, you'd extend it to any company who's paying corporate tax, which is a whole range of Irish SMEs who employ workers that you're representing and making the case for. And I believe that would be a danger for our economy.